Just a second, as it's just loading up. Just loading up. Just loading up. Good morning, good afternoon, and good evening to our speakers and attendees from different continents. We are honored and proud today to have a great panel of speakers from different countries. Even though some of them are in Singapore, but their bases are either in UK, US, Ireland, Hong Kong, and Singapore. As the title of today's webinar is, Doing Well by Doing Good, we at Nishfin are also doing our bit in creating an impact by sharing knowledge, research, and bringing experts on this platform. The word thank you is very small for all their support and participation, and even your participation as attendees. In the past few years, I've heard people talk more about impact investing than CSR or philanthropy. There's a growing awareness and an emerging community around the globe about impact investing. However, it is still visible that most times you talk to people about impact investing and they tend to use it with other terms such as CSR, sustainable investments, and ethical investments, etc. As the world is evolving, the future of investing is also changing. People might think that impact investing has evolved out of socially responsible investing. The difference today is that impact investors are far more proactive in their intention for positive impact as opposed to merely avoiding the negative impacts. The impact investing community is needed now more than ever to address the large scale social and economic consequences of the global coronavirus pandemic. But we need to understand what constitutes impact. Sustainable development goals are galvanizing the global effort in addressing the biggest challenges faced by humanity and have become a guideline for key performance indicators of most businesses. Social entrepreneurs and impact investors are faced with dilemma of investing in impactful yet financially positive businesses. In today's webinar, we will discuss what exactly is impact investing. The main objective is to gain an initial view, learn about it from a panelist whose work has been extremely commendable as social entrepreneurs and investors who are leading the impact investments. Let's hear from them how they measure and monitor impact investments. Let's share these learnings to the wider community who can benefit from their experiences. Please join me in welcoming Edward Yee. Edward, hi.
Hello.
Edward is the co-founder of GIF Funds based in India, an impact fund that provides concessionary financing to social enterprises at scale. He is a Rhodes Scholar, Kairos Society Fellow, and a Global Youth Ambassador for Education. What an amazing profile he has. Then we have Rolf. Rolf is a founder and chief executive officer of Paycode Africa. Paycode is a fintech company which provides solution to pay more than 4 million government salaries, social grants, pension, and agricultural loans. Rolf is an impact investor and an entrepreneur who has been involved in the startups, directorship, and management of number of companies in UK, South Africa, America, focusing on the domestic market and the broader African market. We have Annie Olszewski is the director at Impact Capital Manager. Prior to that, she worked with The Wing, a mission-driven startup focused on the professional, civic, civil, and economic advancement of women. She has also worked as senior associate at the Global Impact Investing Network for the Fund Manager Training Program and as a project manager for the Gene Investor Forum. We have Aideen O'Brien, social entrepreneur and impact investor with a passion for diversity and inclusion. She's an experienced executive coach and organizational development specialist. She has a strong international and commercial background that thrives in dynamic and unconventional environments, and she's lived in Asia, Europe, and South America. Aideen is a director on the Global Advisory Council of VentureWave Capital, which invests in technology for good companies from Ireland. We have Louis Lai, founder, managing director of DVF Impact Holding. She launched Impact Holding DVF with an ultimate vision to garner like minded enterprises and teams to create new value in innovation development and social impact across all industries. It's her goal to champion emerging lifestyle experiences grounded on values that will cultivate social impact. She initiated the Village Reset initiative, which aims to form an alliance of network of communities, rural and urban alike, to embrace an all-inclusive, sustainable lifestyle that is good for people and planet. Thank you all for being our panelists today. We are extremely grateful for that. Now, we'll start the webinar questions with Edward. My question to Edward would be, as a brilliant student and a role model for all the young budding entrepreneurs, can you share us about your journey, that how did you start Gift Funds and your achievements at such an early age? Can you tell us more about Gift Funds, as they give low cost loans to social enterprises, and how did you manage to live 16 days in sleeper trains in India? All those stories we would like to hear from you today. Edward, please.
Thanks so much for your kind words. I think I find it difficult to live up to that. But I'll be happy to share stories, and especially how we started Gift Funds. Gift Funds was started a couple of years ago, after I started traveling. And I had the incredible fortune to actually visit social entrepreneurs in very much their natural habitats, where they are operating, whether it's in slums and villages and farms across South and Southeast Asia. So I think I took just over a year to really do that, immerse myself and to learn from these social entrepreneurs. I spent some time in Bangladesh with Grameen, or the Grameen family of social entrepreneurs. Went to India, and as you mentioned, slept on a sleeper train across India to visit some of the largest social entrepreneurs across India, such as like Aravind Eye Care, Barefoot College. And I think throughout this journey, what I saw inspired me to start Gift Funds. What I saw were incredible social entrepreneurs who were running profitable, impactful businesses. They were changing the lives of thousands of people. But again and again, I saw they didn't have access to resources, specifically capital, especially the ones who were arguably creating the most impact. They're the ones, in slums, in villages, in tier 3, tier 4 cities, which most impact investors are not in. Most impact investors invest in social entrepreneurs in metropolitan cities. And I think what we wanted to do was really support social entrepreneurs in these areas. So today, what we're doing in Gift Funds is really trying to support these social entrepreneurs which are neglected, and trying to help them at scale. So we use a lot of technology and data, alongside partnering with a lot of what we call network partners. So these are social entrepreneurship nodes, like accelerators, incubators, market access providers, in rural areas or in tier 3, tier 4 cities, across the country, across India and Southeast Asia. And partnering with them to actually reach out to social entrepreneurs. This way, it helps us really lower our cost of due diligence quite significantly and allow us to actually do quite a bit of deals at scale. I think last year we did about 25 deals. We were looking at about another 60 or so this year. But obviously, COVID changed everything. And I'm sure we're going to discuss a bit more about that later on. So that's a kind of a brief summary in terms of my story and why we started different than what we're doing today.
Thank you so much. Now I will ask my question to Rolf. Rolf, how did you find yourself working in the African investment sector? And can you share about your background and experience working in Africa, and your experience about Paycode?
Oh, thank you. And thank you very much for the opportunity. So I'm Zambian born. If you're familiar with the country, I was born sort of before it became independent, and then I was about 5 years old when it became independent. And Zambia has had its ups and downs, but generally it's a safe country. It's a great country. I'm very patriotic to Zambia, and certainly what Zambia taught us as a kid growing up is there's no boundaries. and unconditional. So we don't look at people in Zambia, rich or poor. We don't look at them. We just understand that, or nor do we look at them. When I say unconditional, we accept all religions, all colors, and all generations. And it's a great country that taught us as a kid. In fact, I was the only white person in my school, and I grew up in the village. So the school was in the rural area. So I'm very familiar with the rural. And in fact, to give you an indication, my mother passed away 2 years ago at 91. So she had a good life. But until 91, she never owned a bank account and never owned a mobile phone in her entire life. There was no need for that in the rural area. So understanding the rural area and growing up being a young village boy, I was always seeing how the devastation of the rural people, yet very bright and very intelligent. I mean, I always came on the bottom half of my class because the kids, they were just so eager to learn. They would read a broken piece of paper that was a piece of a newspaper that was floating in the wind, and they would read it so many times and speak the common English language deep in the rural areas of Zambia. So when growing up, I realized that what these people needed is a little bit more attention, and most governments and most of the world and the Western world actually realize and understand. So my first entrepreneurship was when I was about 16 years old. I went to these village boys and we started a mango trading business. And what we did is we went to all the villages and said, we will buy the mangoes, but we didn't have any money. So we said, we'd do it on a loan, but we'll come back and give you a 50% share on the mangoes. So we'd go to all the villages and go and sell the mangoes on the side of the street. Well, that made us a little bit of pocket money. And I think that's entrepreneur spirit was where it started. I then went and got a computer science degree and got to the first world back in, I went down to South Africa to get my degree in computer science. And I started working for a company. And after 2-3 years, I realized that, you know, Johannesburg was like New York to me, even though I'd never been to New York, but they had high-rise buildings. And in Zambia, where I grew up, we didn't even have a building. We would live in a hut. And so I went back to Zambia and started a hair care business. And one of the conditions was that whatever I started, 25%, and I'd use that number, this is just a number, it's not a magic number, it was just a number, at 25% of whatever success I create must stay within the country and within the community that I'm making money out of. So this was particularly a product for women. It was ethnic hair care sector. And it became, and it still is today, the #1 hair care product in the world. And it's called Dark and Lovely. If you Google it, you'll see. And we built that business up to #1 in Africa. And funny enough, it was, at the time, was 99% of the target market was women. So what we did is we insisted that we would have 99% women in our company. So so we would only try and hire women as much as possible. And we became very successful, and it was a fantastic journey for me. We then listed the company in Johannesburg, and then finally it got too big and too messy for me. I was just a young village boy trying to run a big global company. So we sold it to L'Oreal, the French organization. So today L'Oreal owns it. But what was interesting is we went and opened factories all over Africa, one in Ghana, one in Nigeria, one in Botswana, one in Zambia, one in South Africa. And in those factories, what we did is we gave 25% to the local partners, just literally gave them, and on condition that they would feed the rural areas in support of any community or any NGO or any conservation type project. In fact, there's a number of conservation projects that are still alive today, thanks to the Dark and Lovely journey. A few in Zambia, a few in Nigeria, and a few in Botswana, I still know that are running. In fact, I think I'm being given the honorary life membership of one of them because it was a school for the AIDS orphans in 1992 when AIDS was hitting Zambia, and you'd have these kids that couldn't go to school because of the AIDS pandemic. And so we created this AIDS orphanage school, and then today it's training about 800 kids. So from that, I then started another hair care business called Easy Waves, and the same journey happened. It became successful again. It is still the #1 brand, and we sold that. And then went to live in America because I decided to get back in the industry I know, and that's computers. And I went and got a job with a company out of Boston and built that and got very involved in that business, became a vice president for worldwide sales. But Africa was my passion. So I went back to Africa and took this company to Africa and built the company up. And long story short, we listed the company on the NASDAQ and sold that company to IBM. From that time, which was 1997 to now, I was literally helping a lot of what I would call DFIs, donor funder investments in Africa. And one of the things and the challenges, and I'm sure we all can resonate to this statement, I would like to not use the word, and I'd try not use the word corruption, or what I like to use the word inefficiencies, and let you read into that terminology. But Africa, and I'm not saying Africa only, but a lot of Africa has a lot of inefficiencies. And it's one of my pet hates. So whatever I do going forward, I wanted to make sure that we could turn inefficiencies of Africa into efficiency, meaning that there was no duplications, there was no corruption, there was no mismanagement of donor funding. So I looked around and I met the George Soros Foundation, I met a number of DFIs, and what I became was a consultant or an advisory to all these companies that were investing in Africa. World Bank was one of good example, as purely to say to them, a project can happen, it'll just take a lot longer because you got to do it correctly. If you want to do a project quickly in Africa, you can do it in a week. You can do it in a month. You can go to the president or the president's son and do a deal. That's the wrong way. It only has a 4-year max life, and that's not me. And so I decided I wanted to find some solution that would help create better inefficiencies of Africa, but at the same time reach what I would call the rural areas where I grew up. Because I did my own research, and World Bank at 2019 has identified that 590 million people over the age of 15 do not have financial services or access to any financial services. That's 590 million people we can uplift. And so I found this piece of technology. We then started the company 2014, and today, 4 or 5 years later, that's what PayCode does. So it is, I would say this is my last roll of the dice. I think I've done too many ventures, getting too gray at the moment, but PayCode is my last journey. And yeah, it's to address the rural people of Africa. We want to have, my mission and vision is to have 100 million people being positively affected in Africa through this technology.
And so far, how many people have been affected?
At the moment, we've got about 5 million people in 8 countries.
Wow.
So 5 million people, every day we pay completely securely because you cannot have duplications. A good example, we implemented the system to pay government wages and civil servant wages in Ghana. 886,000 people get paid on our system every week, every month. And when we installed the system 4 years ago, because of the biometric, because of the inefficiencies that was there before, the government announced thereafter, that was 4 years ago, that we caught 47% of their payroll actually don't exist in the payroll. And we saved the government $35 million a year on just duplication. And what the government did, which I must say I've got a lot of admiration for the Ghanaian government, is they took that 35 million and they didn't go and buy fancy cars. They didn't go and buy they put it back into the community, because that was money that they were paying for 20 years that they didn't realize. They even found somebody they were paying that had passed away 10 years ago, but still paying him a salary. So these are the things that are constantly happening in Africa. And it gives me great pleasure when we actually sort these inefficiencies out. So to answer your question, it's 5 million people. By the time we finish our 2 new projects in in Nigeria, we'll be going up to about 30 million people by the end of next year.
Okay. Yeah. So my next question was that only, that where do you think you will be in the next 1 year or 2 years with the PayCode?
Yeah, 30 million, and quite interesting for my panel here. It's not by choice. It wasn't by plan. It wasn't a strategy, but over 60% of the people we are touching at the moment happens to be female. How's that? So the farming project in Mozambique is about 70% female women. The farming project in Zambia was about 57%. And the microloan to the informal traders in Nigeria is about 60% women. Just as a point to note.
Yeah, that's amazing. Rolf, you wanted to share with us some slides.
Yeah, and I was going to say, but I've spoken about the slides. I mean, I can share them as pictures just to see.
Yes, we would like to see and show the pictures of some.
These pictures are actually live pictures.
Yeah.
So that one is the Easy Waves. You can see I was a lot younger then. That's a Botswana picture where we're launching the Easy Waves. That's the product. Then you're familiar with Dark and Lovely. That's the Dark and Lovely product. And then another one that's quite interesting is Nature Nectar. So we started a project about 9 months ago where we are supplying, and through the PayCode initiative, we found this company, and me in particular have taken a personal interest in that. What these people are doing, Nature's Nectars, is they are providing beehives to the rural farmers and giving them the beehive in return for guaranteeing the honey from the beehive and stopping these rural farmers from cutting the trees down. They are saving 10,000 trees a year purely on finding and on telling them to use that in the picture here, that beehive, because for every X amount of kilograms of honey, X amount of trees are cut down at the base purely to get the tree to fall down and collect the honey from the fallen beehive. Now, you see with the rope and everything like that, and with this whole initiative, they are saving trees, they're creating jobs, they're giving them equality, they're giving them upliftment, and to pay for these inputs and that, we're using the PayCode technology. This picture here is the Mozambique picture where this particular picture, this lady was waiting for 3 years to get a social grant and never got her social grant. It was paid, it had promised to be paid, but she never actually received it. This was the first time in 3 years she received her money because of her biometric and because of the system. And there you can see a very pleasant smile she has. And then here's us under the mango tree, teaching the people before they get their cards. This is in Mozambique, and these are live pictures. As well as we not only do social grants, but we also do the distribution of HIV drugs and making sure that the drugs are not used to sell and create cash and go and spend the cash on alcohol or non-relevant goods. So we guarantee that the distribution of drugs and HIV thing is 100% secure because of the biometric. So these were just some of the things I wanted to share.
Yeah, thank you so much, Rolf. Yeah, my next question is to Aideen. Aideen, I would like you to discuss about how do you differentiate philanthropy with traditional investing and impact investing? And Aideen is, or I should say was, a philanthropist. Now she has turned into an impact investor. So I would like to ask her, what made her shift from a philanthropist role to becoming an impact investor? You're muted, Aideen.
Yeah. Thank you, Nisha. I'd first like to emphasize that I don't think impact investing can or should replace philanthropy, as many of the world's most pressing challenges of inequality, poverty, climate are so complex that some are still best addressed by social enterprise. And I also feel it's good for us to remember that until recently, solving social and environmental issues was seen as the sole responsibility of governments, philanthropists, and social enterprises, and that it's only really become obvious in the last few decades that these institutions and organizations cannot address these complex issues alone, and that they often don't have the tools or the resources to bring credible responses to them. And I'm quite pleased that the private sector has got involved to find solutions. And this is where impact investment comes in. So my shift in focus from philanthropy to impact investment is because I believe it offers a more sustainable model for achieving impact. I was involved in some projects where major donors pulled out, and the fallout was really very, very sad. However, I'm beginning to realize that impact investment means different things to different people. And it's often thought of as now as an asset class, but it's essentially a philosophy and an approach to investment. And for me, impact investing is investing with the intention to address a social or environmental issue and measuring both the financial return and the impact created. And I think what distinguishes an impact investor and what I'm happy to identify with is that impact investors invest with intent of impact, but also with a system of impact measurement. So the involvement of the private sector is super critical. And it's also bringing innovation, accountability, and sustainability to the way these world issues are addressed. And impact investing is piloting, experimenting, and taking risks that the public sector often isn't willing or able to take. And I see also accountability in how the issues are addressed, which personally is something that's really important to me, because it's implicit in the intended impact that it'll be part of the overall strategy. It'll be monitored and measured. Although measurement of impact is challenging, but it is evolving.
So are you showing some slides to us?
No, no slides. Just me.
Okay. Yeah. So, Eddie and I went to your website, Venture Wave Capital.
Yeah.
And I saw that they publish principles of investment, and it's very rare that an investment fund will conduct like exits only after considering the effect on sustained impact, which is rightly, I think, stated in your principles 7. And what inspired this initiative, and how do you evaluate the effect of sustainability?
Yeah, it's funny about the principle number 7 on exits, but can I talk a little bit more about the principles in general before I go into the individual ones? Because they're very important to me, that anyone I do business with actually does sign up to the operating principles. So these are the IFC operating principles for impact management. And they're bringing discipline, transparency, and credibility so that investors like me can have a better view of how our money is being used. And they're very practical and mainly about process. And a fund that's a signatory to the principles has to define what their intent is, how the investment strategy will deliver on that intent, what are the processes that ensure the strategy is being implemented, how the impact is measured, and how it is monitored. And they're really simple and practical, but very, very thorough. And finally, and very importantly, the transparency, which ensures accountability. And the signatories are required to publicly disclose annually on all of the above. So I'm confident the principles will help to prevent the practice of impact washing, and will bring accountability. I haven't spoken about exits yet, but I don't want to take up too much time, Nisha. But the principles were launched last April, and there are now over 100 signatories, and venture capital, of which I'm part of, signed up. And I think there's been 2 more, very recently, there's been 2 more signatories since. So yeah, I'm a big fan of the principles, and I think impact investing sector needed it badly.
Thank you. Even I like those. I've rarely seen those kind of principles on any investor's, website or disclosures. So very good initiative, I think. Okay, thank you so much. Now I'll invite Louis. Louis, kindly share experiences about implementation of impact projects that you did in China and Hong Kong.
Yes. Thank you, Nisha. Thank you for this opportunity. I'm really excited to be able to, sort of like get into a conversation with so many people that have, contributed so much in this space. So I'm just giving a very brief, sort of like account on the journey that I've embarked on. But for people that's out there listening and they are thinking of, coming into the impact investment space or, maybe contributing or getting involved, I think would be a good opportunity, and you would never regret, because the reward, other than monetary, it's amazing. I think I look back, just today, because I was like, going through my photographs, looking at, some pictures. I never done, like, I told myself like, wow, I've done a lot and we have experienced a lot, good or bad, but we definitely made some footprint. I wouldn't say a change yet, but towards the change, yes, I think we are either doing it ourselves and influencing others, whether they are in the city or in the rural, people alike. I think we are sort of forefronting this movement. So we started in China in 2015 as an impact investment management company. So we are very small. We don't have a big AUM. All we wanted to do is actually, like Edward shared earlier, because a lot of those grassroots entrepreneurs, they don't get proper resources. They don't get a bridge to fundings. So they are the one that are doing the work, great work. They have great ideas, but very often they sort of like not able to scale because the lack of resources and funding. So I think back then we wanted to sort of facilitate that area. So we started a small fund investing in social entrepreneurs that are doing some great work in the rural areas. So we actually came up with an ecosystem ourselves. So this ecosystem sort of built out of entrepreneurs that are doing the work. For instance, they probably are doing regenerative work in the fields, or they are doing impact measurement. We invested in an impact measurement company that until today, later I would sort of give a more in-depth sort of sharing on them. So these are the people that we have actually put into this ecosystem, and we embark on a journey to rural areas and in line with the government, Chinese government, to do poverty alleviation. So that's how we started. We went into very, very rural areas like Guizhou, Yunnan, which is the poorer sector, district, I would say, province. In the years that we have actually been working with the local community, we realized the implementation gave a lot of insights to us and understanding of the actual needs of these people, the community. It is not a top down, we can't sort of like look at them and say, okay, we're going to, sort of give you this funding, we're going to, build this school. I mean, there are a lot of people doing that, but I think the fundamentals that we need is actually to empower them. How do we empower them? By way of educating or by way of, investing. So that actually got us thinking along the way. And we, through these years, we actually built a very, very strong team to implement solutions. Yeah. So later I'm going to share maybe on the slides, if you would help me to bring out the slides. I'm just going to take one of the vertical that we have done, instead of like sharing a lot, because we don't have a lot of time. Or should I just get that slide out?
Share, because I think my Zoom is giving me problem in sharing.
Oh, okay. I will try.
It's not picking up the file actually.
Okay. So have to give me a minute. Okay. Can you see it?
Yes, we can.
Okay. So one of the implementation we did was actually to tokenize the assets that the farmers have, because we realized that a lot of assets they have, they are not tagged to any value. For instance, before we come to the crop, right? We talk about livestock. They have chickens, they have cows, they own the land, but you know, before they can monetize it, it's of no value. So if someone falls sick, or you know, one of the children wants to go to for a higher education, they very often found themselves with not enough money. So what we did was actually to come up with a digitalized platform to tokenize, based on blockchain technology, of course, to tokenize these assets. And using a micro lending empowerment platform, we could, you know, sort of give them a microfinance before they could, you know, sort of like monetize in the market. So what we do is to tokenize these assets to bring liquidity from the future use. Yeah, so this is a very interesting bag that we actually work with, the company that owns this bag. So what they do is they are able to sort of value the crop, or the crop that, you know, are placed into these bags. They are able to give very exact measurement and valuation to how much it's worth, the crop is worth, based on, you know, how the quality of it. So these are like sort of integration of technology. We are able to, you know, sort of like adapt into the scenario to help build, you know, higher valuation of what they are maybe, you know, putting into a market. The next slide I'm going to share. Yeah, so by way of empowering them, we are building finance actually literacy in the community. So very often they are not aware, you know, financially they are sort of like lacking, as well as data literacy. So they are able to understand how they can use the data that, you know, they generate from the crops, or from, you know, the operation. How are they going to, you know, sort of monetize that, as well as welfare literacy. Many of them have been exploited, so they are not aware that actually these are exploitation. So I'm not saying that, you know, we are educating them to be aware of their rights, but at the same time, you know, they need to know as the world evolve, right? So, you know, they should be sort of measuring up to a better, you know, sort of like sustainable living. So so this is what we have actually sort of implemented and piloted in China. And we were going to take this model and implement that in Asia before the COVID started. So, so we are looking forward to this implementation after the COVID. The pilot from China would be implemented in Asia, and hopefully we are able to, you know, sort of like benefit more sort of rural areas and the community. If you want to, you know, get to know more, I think I can share with you if you add me on LinkedIn. Yeah.
So Luis, for these kind of projects, these investments come from investors, right? So which like what kind of investors are contributing, or you know, giving money for these projects?
Okay, so when we first started, well, the whole continuum of, you know, impact investment is very long. So like I say, when we first started, we funded ourselves, as in, you know, we raised our own fund. And we started from there. We haven't really got sort of the institution to get into the investment yet, not yet. So we are still, sort of like very much organic, growing this ecosystem with the social entrepreneurs. Yep.
Okay. Yeah. Thank you. Next.
Maybe it's a good opportunity for me to, get to know someone who is interested to come in.
Yes, definitely.
Yep. Thank you.
Sorry to keep you waiting, Annie, for such a long time. In the past, Annie has been involved with well-known startups and non-profits such as Wing and Global Impact Investing Network, and now she's the director of Impact Capital Partners. So, Annie, I look forward to your sharing and gaining insights on how you evaluate impact investments and monitor and measure their performance.
Sure. Well, thank you so much for having me and inviting me to participate, and for everyone who attended. It's a tough act to follow after the four of you and your amazing stories and work, so I will do my best. I also wanted to say up front, I very much agree with Aideen's qualification of impact investing and the role it plays in the market. Part of the reason I got involved in impact investing and responsible investing and the various terms that exist in this world is the acknowledgement that the scale and scope of the issues we're facing as a world are not going to be solved just by philanthropy or just by one solution. We need all sides of the market to really be working towards a solution. So I sort of found myself and decided to focus on the private market front, but very much agree that we need much more than just the private markets, but they're a piece in this bigger puzzle. So that's sort of how I found myself in the impact investing world, and have been most recently joined Impact Capital Managers, as Nisha mentioned, which is a network. And maybe I will share some slides just so there's something everyone can reference. So let me pull those up quickly. Great, can everyone see that okay?
Yeah.
Awesome. So I just want to thank everyone again for attending, and just a little bit about Impact Capital Managers. So we are a network of private capital fund managers investing for positive financial returns, so market rate or above, as well as measurable social or environmental impact. And I know a few of us have discussed on the call the importance of measuring impact, which is really good to hear. I think it's one of those things that as an industry, we talk about it as the differentiating factor for impact investors. You're an impact investor if you are measuring your impact, but as an industry, we have very little consensus around what that actually looks like and how to actually implement those practices. So that's something that we're tackling as a network, and I'll get into that a bit more later. I also will say I'm a little different than a lot of the presenters on the call today, in that we are a network of investors. So we work across many different investment funds, specifically venture capital and private equity. So also to Aideen's great point that, impact investing isn't just a singular asset class, it works across all asset classes. And in my career, I've worked across, public markets or larger institutional investors. And our network is really focused on this smaller subset of private capital fund managers. And that's very intentional. Our goal is to be incredibly practical and useful for these members. And we see having a more narrow focus as a way to help slowly grow the impact investing space with integrity and with intentionality. And really our overarching goal is to kind of shift the debate away from the ways that impact objectives might detract from financial performance, but in towards this idea that impact actually enhances and drives returns. So very much aligned with what all the other presenters said today in terms of their work. Creating a positive impact is actually good, just business sense in a lot of ways. And that's sort of what we aim to educate our investors on in the broader space. This is just a quick look at our team, but we don't need to get too much into that today. But just to say a bit more about why we exist. We're a relatively new organization. We incorporated in 2019. And our mission is really to, as I said, accelerate the performance of our managers and then the broader smart growth of impact investing marketplace. And it's really, we accomplish that mission in kind of twofold ways. The first is to serve our members directly. So working directly with those venture capital and private equity funds to improve their practice when it comes to deal making, deal sourcing, measuring their impact, finding even just standard like back office procedures, legal representation, all the pieces you need to actually operate and execute a fund successfully. But then we also have this broader mandate towards growing the field itself. So we work with private market investors outside of just our core membership to really think about how we can grow the impact investing space in a really intentional and meaningful way. We currently have about 52 member funds that represent about $12 billion in assets under management. And these members look, again, it's a very specific kind of subset of investors, and geographically, we are narrowly focused right now on investors that have the majority of their portfolio in North America. And again, that sort of gets back to this idea that whatever we do, we want to make sure if we're hosting an event or doing a research report or writing a roadmap for how to do impact measurement, that all the investors in our network can access that easily and actually put it to practice the next day when they get back to their fund, as opposed to sort of a broader, kind of more general conversation. One of the other things I want to highlight that I think is relevant to this conversation is, I think we've all seen a huge growth and interest in the impact investing market space over the past couple of years, and in the growth of just underlying businesses that define as impact driven or mission driven. And while that is awesome, and I think it's a great sign that hopefully all the work we're doing is going to be the new normal someday, that also means that we have to play a role in making sure that if people say they're achieving impact as a fund or as a company, that that impact is actually happening. So as part of our membership criteria, all of our members have to measure and manage their impact and have a plan to do so. And they also all need to define as an impact fund. So, we want people to be proud of the fact that they're an impact investor, not hiding it. And finally, all of our members are invite only. So all of our members are screened by the ICM team and the board to make sure that they sort of meet these various criteria points. All towards this bigger kind of field building goal and goal of growing this space in a very intentional way. Just to give you a sense of our investors, we are very much inclusive in terms of impact focus. I'd say about a third of our investors are focused on environmental sustainability, climate change mitigation, and sort of the catch-all under that, including sustainable consumer products, circular economy initiatives, climate tech, et cetera. About a third of our investors are focused on education and workforce development, and the remainder are really focused on healthcare and access for underserved communities. And I think all of those impact verticals align in many different ways. We know we have some investors that are focusing on mitigating pollution, for example, or invest in a company that works on that. And obviously that has very measurable healthcare outcomes. So we look a lot at the intersection of all these different impacts as well. This is just an interesting initiative, and I can drop the link to this in the chat, but this is something we launched at kind of in March of this year. And I think sometimes it's we talk about impact investing. I think Rolf alluded to this as well. It can mean a lot of different things to a lot of different people. And one of our goals as an organization is to be very clear on when we say this is an impact investing fund, well, where is that fund based? What's their mission? How do they align to the SDGs? What companies do they invest in? What do those companies look like? All of those questions. So we're trying to be super practical and really spell out for anyone who's interested in impact investing what we mean by it. So what we did is we took all of our members, got a ton of information on, what's happening at the fund level, where are their portfolio companies, what does their structure look like, and put it together in this sort of interactive map that you can visit on our website. And really you can sort by our member funds, by where they're based, by their impact theme, and then kind of see what kind of companies they invest in. So for example, the one that's on this screenshot here is one of our investee funds, Reach Capital, which focuses on education development. And this is one of their companies, Nearpod, which is a mobile app for teachers. So I encourage all of you to kind of just check out the map, not just for learning more about ICM, but just more broadly. I think it's a great way to understand what we mean when we say impact investing as a market.
And is it free to access, and no membership is required for this?
Yep, no membership required. It is free and live on our website. Great question. We also have a little sort of space there for anyone who has ideas for other sort of data points that would be valuable to share on that map. So encourage also a lot of feedback there as we're still kind of figuring out the best way and what data is most relevant for everyone. And this is just a quick look at our programs and projects and sort of how we execute on that mission that I mentioned earlier. I won't go into too much detail here, but I will say our one research report that, again, I think is most relevant for this conversation and for the audience today is the Alpha and Impact, which we did with Tideline, a consulting firm. If you're not familiar with Tideline or with Alpha and Impact report, I encourage you to check it out because it really looks at and continues to build on this argument that financial returns are actually generated as a result of impact, not in spite of. And it outlines 10 drivers of financial return that are brought about by impact. So it really looks at the intersection of impact and financial return in a very clear, tangible way. So encourage you all to check that out as well. I can also drop that link in the chat if useful.
Very useful.
Yeah, and then so more generally, I mean, just us as a network, we do a lot of convening, bringing our members together to sort of share just best practices, hopefully co-invest on deals. It's a very collaborative and practical community, sharing just sort of general best practices, interesting articles, reports. So it's a very just sort of collegial network. And again, because all of our investors are operating in such a similar space, we see a lot of interaction and actual co-investments happening as a result. And one of the other pieces I wanted to mention before I kind of conclude this piece is this impact measurement and management question that has come up quite a bit. And I'll start by saying that what we're working on is still in the internal rollout phase, so I'm not going to go into too much detail, but I did want to highlight the, we say in our criteria for membership that I mentioned before, that you have to be measuring and managing your impact. But what does that really mean? And I think a lot of places say that and a lot of funds say that that's integral, but how do you actually do that? And I think Aideen's alignment with the IFC is something that we're seeing a lot of coalescing around as well. The principles are incredibly clear, and without being prescriptive on what tools or frameworks or roadmaps or whatever it is that you're using, because we don't think that's necessarily the most important thing, which tool you're using, just find the one that works for you. But we do think it's very important that you are defining your impact objectives and have a clear theory of change of how you're going to achieve your impact. Establishing some sort of process by which you're going to assess if that actual impact is happening and if that company that you're planning to invest in is going to have that impact. How your role as a manager is going to affect that impact. So if you never invested in this company, what would happen and would that impact be achieved? And then finally, how are you kind of following up to make sure that the impact that you intended to have is happening? So those are sort of our 4 very broad pillars that we are kind of hold our membership to and think are the really core to being an impact investor, is making sure you're at least doing those 4 things. And of course, there's a million different ways to go about those 4 pieces. And we have created sort of roadmaps and toolkits for our members to get there. And in addition to that, we also know that there's a lot of ways to improve upon practice and go even beyond those 4. I think Aideen's point on exits, we're actually working on a piece right now on legal innovations and impact investing. So I'd love to connect on the work you're doing around exits. But there's a lot of ways that investors can ensure impact and through impact measurement and different structures and practices. And so, yeah, we're just actively working with our members on the best way to do that and kind of holding up the examples of who's doing the best work in this space. And maybe I'll pause there. It feels like a lot, but here's some just contact info if anyone wants to get in touch.
Yeah, that's great. Thank you so much, Annie. Very insightful and helpful. My question to Edward now. Edward, we could not complete our conversation earlier, so I have a question for you. GIF funds actually, they give low-cost loans to social enterprises, and in your case, like how do you measure and monitor the progress of these enterprises?
Sure. So on the financial end, because when we start lending to a social enterprise, we don't work in the similar round system as most other funds, simply because we work in venture debt. And so whenever we provide a loan to a social enterprise, we expect it to come back for more loans afterwards. And these loans, the quantum as well as the duration really increase exponentially as a social enterprise borrows more from us and stays with us over a longer period of time. As a result of that, I think what's interesting, it gives us actually touch point and follow-ups, which we can then work with the social enterprises on. So we're largely aligned with IMP, and we're using a lot of their frameworks, as well as other impact measurement guidelines internationally, and trying to apply that to social enterprises on the ground. What we found is that it's quite difficult because each social enterprise is a very different stage, and we broke up a lot of the guidelines into different pieces. I think we tend to focus on the methods section simply because I think we wanted to understand the causal relationships a bit more. Largely on observational designs, if you're familiar with the evaluation space, and trying to do that at scale at low cost. Usually we do that on an annual basis or whenever they borrow from us again. And that gives us a good excuse and to some extent a carrot for them to actually do their evaluation again. we take a different approach to evaluation though, because we don't want the very typical upwards accountability which or rather NGOs actually face from funders and donors. Instead, I think we to some extent we buy into kind of Acumen's lean data approach, where we try to incorporate really process of improvement within the evaluation process itself. Additionally, because our capital is catalytic capital, there's often follow-on funders after us. In some cases not. So we have had follow-on funding from also our social enterprises had follow-on funding from like TPG's Rise Fund, for example, and they have certain standards which they're looking for. I think TPG uses IMM, and the idea is that we want to help them slot into these international standards so that they are to some extent impact ready by the time these impact investors come aboard. And for those especially, I think if you look at Bridges and TPG, they're looking at forecasting impact pre-investment. To some extent, our help would help them validate some parts of the impact thesis. Yeah.
Okay, thank you so much for that. Thanks, very useful. Rolf, I have a question for you. You mentioned to me when I had a discussion with you earlier that you are looking for raising the funds for like PayCode, the venture rounds. So are you finding any challenges as far as this impact, the balancing of impact and the returns when you have discussions with the investors?
Look, I think COVID hasn't helped much lately, but I still think that there is still interested investors out there. You know, one of our investors who has just recently exited for good reasons, and some of the panel would understand, was the George Soros Economic Development Fund. It's called SEDF. They're quite interesting fund. I've dealt with them in two other projects. One was a rice project in Mozambique, and I'm very totally in support what and the rest of the panel have said. Impact can be measured in many ways. You know, I could say that I'm giving the best impact versus the next person versus the next. And the other thing is, one must also realize that if you go into an investment like I do, and most of my investments is more passionate than it is financial, and unfortunately, it's become financially beneficial to me, but it wasn't the initial reason why I got involved in Dark and Lovely. It wasn't the reason why I got involved, that I've now got involved in this honey and project in Zambia, and vice versa, PayCode. However, when you've got a kind of a double-edged sword, you've got a responsibility to investors because they don't want to lose their money and they want to get fairly good returns on their money. But at the same time, you've also got to stick to your mission and vision and your passion. And sometimes passion doesn't always make money. And I'm actually a member of a project, which is the one I was relating to education. It doesn't make money. It constantly needs feeding. And sometimes you get what I use as an example. You get investors fatigue because investors don't want to keep putting in it year on year. So the key thing is you've got to make them sustainable, and you've got to work away and ways that it stops going, excuse the expression, but the begging bowl every year to the same investors and say, will you put in money? Coming back to the point where your question is on PayCode. I went to Soros Economic Development Fund because I knew this particular sector of they've got three entities. They've got Open Society, which is a totally different mandate. They've got Soros Fund itself, which is a very tough and a ruthless investment fund. And that was far too big for what I was looking for. And then they had the small little entity called Soros Economic Development Fund. And it's actually a really nice model. They're a Delaware company, so they cannot make profit. They register Delaware. They cannot own more than 49% equity in the investment, and they can't have board control. At the same time, and they phrased the word, it was a new phrase to me, was they called themselves a catalyst investor. I sort of took a step back and said, well, what does that mean? And if I can use a crude example, and that is having a little baby getting onto its feet, and the moment the baby starts walking, they want to exit, and they want to exit on a soft exit. They want to exit on a very aggressive exit, but at the same time, obviously they don't want to exit at less than what they invested in. So you with me? So you got to balance. So now suddenly Paycode's making lots of money. The exit for them, they can't afford it because they can't make profit. Do you understand? So it was a balancing act. That's the first thing. The second thing is I'm a very strong believer that I will take an investment if it is to get the mission or the company up and running and started. But what I don't agree with is if you have an investor that is not a sectorial investor, somebody who believes in your mission and vision, somebody who understands your market, somebody who can bring in the value on your growth and your mission. So having somebody sitting with respect and throws a whole ton of money and then every quarter wants to know what your results are financially, it's not what I'm looking for. So if you look at all my investors that I've had over time, and in particular, Paycode has not just Soros, or didn't just have Soros. I have a private equity company out of Hong Kong that's got about a 20% equity, and their vision and mission is to improve African financial inclusion. So they fit my model. So coming back to your question, yes, we've got to the point where Paycode has hit the tipping point. I wanted to make sure that we're addressing the people that we said we would address, and that's the rural area. I didn't want to start a company that, excuse the expression, sorry to the people who love the products. I didn't want to become another PayPal. I didn't want to become another mobile operator. I didn't want to become just your standard first world banking financial inclusion. There are tons of those good products out there. Millions and millions are getting launched today. That's not me. Where I need to address is those people under the mango tree. Like you saw in the picture with all those women sitting under the mango tree. That's my market. Those people have 4 major issues. First issue is they do not have money or the wherewithal to even pay for airtime. So now you're going to give them some sort of mobile payment system that if you're lucky it can connect, but they don't even have money for data. So what do you expect them to use it? So that's the first thing. Connectivity. Everyone says the whole of Africa is going to get connected. It's never going to be connected. Okay, it's getting improved, but it's just not going to reach under the mango tree. So I call it the deep rural. The other thing is, how do you financially include somebody, or how do you bring somebody into the system in the world when they don't have an address? If you wanted to reach my mother, you would say, go down that dirt road, left mango tree to the right, and then the second tree on the right. I mean, what kind of address is that? So you can't financially include anyone. You can't bring them into some first world system unless you have, and I know there's a new technologies coming out. I mean, one I quite like called What 3 Words. It's amazing type of technology that kind of identify. But yeah, and hopefully we'll get better at it. And the last but not least is that people want to be able to have dignity. And yes, you might think that the Africans would love to come and reach out and get a donation every month, but they actually have their own dignity. They want to be able to give them the money, teach them how to, not just how to fish, but how to actually catch the fish and how to eat the fish, and teach them how to become their own entrepreneurs. And this particular venture that I'm on does that. Now, coming back to your point, is we've now got Soros exiting as we speak. I mean, we literally should have them completely out by the end of this month. And then I call it the Paycode tipping point. We've reached a milestone of 5 million people we're addressing. We've won some World Bank tenders, and I think one's a World Bank tender, the other one's a Belinda Gates tender. I can't remember the other. And that will take Paycode to 30 million people. To do that, I call it the tipping point. It's now where Paycode needs to get a sectorial partner to give it the wherewithal, the resources to take it to the next level. I know that one day Paycode will reach to the 100 million people. And although I'm one of the leading investors and the driver of the business, I might even end up with a few % of the company. That's irrelevant to me. It's reaching those 100 million people within the next 5 years, by 2025. And if I have to go to the New Yorks of the world and go and beg and borrow and find the money for the right sectorial partner, I'll do that. And that is because I know the impact. And again, I come back to the point that the fantastic panel that we've got here, I'm sort of out of my league when I hear you ladies talk and gentlemen talk. I mean, it's kind of like, hang on, I'm just the Zambian boy from the bush. But I can tell you something, that everything that we will do, and if you look at those pictures and many more pictures, is the impact that we're giving them. Okay, the impact. And I can give you some really bad stories where we went to DRC and the ministers have said no to my solution on a social grant project funded by the World Bank, purely because they know we're going to capture 20% of the ghost workers. Well, I'm sorry, I'm not prepared to do that. If that, you can either take my system and I'm going to catch those 20%, because the money that we catch goes back into the ecosystem, goes back to the communities, and it's a better for all. So yes, Paycode has reached its tipping point. Yes, we are going to go to a race. I needed to get Soros exited out as the catalyst investor, and we've got a really great relationship with them, and I have. But now it's the time that we need to now bring in a new bunch of investors and take us to the next level.
Very, 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 very inspirational. I really liked to hear that.
Last project, ladies and gentlemen. This is my last project. You can see the gray hair. When I've done my 100 million people
and
in
I'm
Africa.
sure we can come to you for mentoring. You know, we'll get mentored by you. Yeah. Yeah. I have a question to Annie, or maybe you or any of you can answer that. Why especially Annie? Because Annie, on your website, you showed that you are in touch with many impact investors. So there is a new concept, which even one of the attendees have asked about greenwashing, but I would say the term impact washing. You know, have you ever come across, you know, any investor or any situation like that where you are dealt with impact washing?
Yeah, absolutely. And, you know, I'll also say that I think that's one of the things we try to screen for in terms of membership for impact capital managers, and why we have that application and invite only process, because we want to make sure that, again, any of the funds that are joining our network are very intentional about the impact they're having. I think the way that we screen for it, and it's probably a good rule of thumb, is back to this kind of impact measurement and management question, like is the fund, and I'm speaking at the fund level now, less at the company level. I'm not sure which level the question was asking on, but just speaking to the fund side of things, you know, is the fund able to tell the story of this is the impact we want to create, and we are doing it by investing in X, Y, and Z companies because we know they will have this result, this intended outcome. We're going to make sure that we're tracking them 3 months, 6 months, a year to make sure that they're actually having that impact. If they're not, we're going to step in as the investor and, you know, help them get back on track, and or have a conversation of, we invested with you not only to get financial return, but impact as well. And if you're not meeting those objectives, how can we rearrange our agreement, or have that kind of hard conversation? So when we're talking to investors, and Ralph mentioned this too with the investors he looks for, you know, he is only looking for investors that are similarly aligned with him on, we want to have an impact. So I'd say at the company level, that's of paramount importance and something to look for. I'd say at the company level, like, are the investors into that company also impact focused? Because I think we all know in VC and PE world, it's very easy to, once you get a ton of money, to just sort of totally drift from impact and just focus on growth and kind of just throw the rest away. So that alignment between investor and company in terms of impact is incredibly important, and one that we look for. And yeah, just being able to have a very clear kind of theory of change of what you're trying to do in terms of creating an impact and how you plan to get there, I think is one kind of easy way to screen out that conversation. Because I think a lot of, you know, it is sort of a buzzword now, so it's easy to throw onto your website or throw into your company. Whenever you're talking to someone face to face, if they're not able to tell that story, it's a pretty good sign that impact isn't really baked into what they're doing.
Yeah. Thank you so much. Anybody else? Yeah, Edward, you would like to
add on that? Yeah, I completely agree. I think where the state of the industry right now is that if you have some intentionality and understand at least your causal mechanisms, or at least a theory of change at the minimum, you're already ahead of everyone else, which is to some extent quite problematic. I think we really need to move away from just your intentionality, your traditionality, and being able to really prove that. It's still some way away, especially if you look at mainstream capital and trying to attract and grow the space. Jin's, I think, 2020 annual report said that, you know, I think it surveyed that impact washing was the biggest challenge for the sector going forward. And I think most of us very much agree. I do think that there's a few interesting tools coming up. I work with the GSG, and there's quite a few different products such as outcomes funds and wholesalers, impact wholesalers, which would drive the market towards less impact washing and towards certain standards of accountability for impact investors. Because I think that's something which is very much lacking, and incentives to report impact well by asset owner, from asset owners who are well educated about impact. I think that's still lacking in the market. BSC, Big Society Capital, is probably one really good example. Wholesaler really catalyzing a lot more capital and holding impact investors to task for impact and to pretty rigorous standards of impact, where they look at outcomes and they look at how you measure it and the standards of rigor of validity to some extent.
Yeah, Edward, would you mind sharing those links with our attendees? The tools that you
what I mentioned.
the tools for the new tools and the new links. If you can share some with the attendees, or maybe you can share that with me later, and then I'll share with the registrants. Right. Thank you so much. I'm just checking if there. Okay. Any has. So I don't think we have questions. Oh, we have one. So it's going. To start impact investment, is it better to begin with one's closer market in one's country, region, or then to be like going to Africa or South America region that seems to be compatible with impact investment? So what is your opinion about that? Who? Yeah, ID.
I think we need to think of a broader impression of impact, because every company has impact. Every individual, every company has impact. And we don't need to be right in the impact investment market to make change. And the companies, if they just think what would happen if we're not there, and then if they are there, they can see that the impact they're making. And all of the ESG measurements, I still think that they are extremely valuable and are on the edge of impact. So I don't think you need to get on a flight and go to South America or to India or to Africa to start impact investing. I think a lot of people can do can have a positive impact by changing the organization that they're in and using an impact lens. So I think it's possible. I mean, also, I think having a personal connection as well. I mean, as a philanthropist, I was quite confident in the work that I did in Cambodia and Rwanda, but that was because I had a personal connection. And when you meet people and you get to know them, that's when the trust is established and the ideas about collaboration start. But yeah, looking on your environment where you are, I think, is the first place to start.
Exactly. Yeah. Thank you so much. Anybody else would like to add on this?
Yeah,
yes.
I think maybe it depends on which, where about, in a continuum of impact investing you are entering, the market. So whether you're, at the beginning, so you might want to be more hands-on, go down, work with the grassroots like us, or, maybe you're further down, as an investment and institution. You could, sort of like invest in projects anywhere globally. Yeah.
So impact done as an investor or as a hands-on, like
sure.
you yourself are involved.
Yeah. Maybe I want to share something with Edward earlier on, talking about how, the impact measurement and the balance of, return of finance. So last bit. So we recently launched a sort of a platform based on the blockchain technology in Hong Kong. It's called the IDCC. IDCC stands for this Impact Data Consortium chain. So if you are interested to learn more, you could go on to idcc.hk. Yeah, so this is not advertisement, but I think, you know, it'd be quite interesting for, you know, those who wants to know, understand how blockchain actually could be used to sort of like bring together the community, as well as, you know, the exchange based on time bank. And, you know, there are many layers to it. But going back to investors, I think it'll be interesting to sort of like base this measurement on technology. I think that would sort of like be transparent and bring forth, you know, very clear um, uh, overview of, you know, what's going on really in the market. Yeah, in the investment.
Thank you. Edward, you have a question from a Singapore-based student, and she's asking that what challenges you faced when you went to South Asia instead of starting in Singapore? So how do you differentiate the two environments?
It's a completely different environment altogether. Never worked overseas. Okay, I've never worked in LMIC before that. So before that, I worked in the US, I was in Bay Area, very much in the startup world. And to be honest, I wouldn't have survived at all without my co-founder. Yeah. I thought before I went in that I kind of knew what, you know, finance and raising funds for startup was about, and that I could perhaps do it, you know, help startups do that, help social enterprises do that. There were tons of different challenges which came up. Ralph's inefficiencies come to mind. And I think in our early days, it's really quite tough because we were a nonprofit, moving funds internationally into India, which is a capital controlled country, and lending money with FCRA funds, which are basically donor funds, working institutional donors from abroad. And this contravened so many rules that no one knew about it. We spoke with, I think, 60 or 70 lawyers, and none of them knew anything because they knew the state regulations, they knew the federal regulations in one of these fields, but none across the board. So we basically had to piece everything together ourselves. And that's just the kind of the tip of the iceberg about, you know, just the legal issues. And this is all above ground legal issues. There's a lot of situations where we had to draw a line in the sand, and this meant we had to give up the company. But somehow or the other, we found someone to help us on the way through. Whether it was, you know, people who really believe in the work we're doing, or a partner which we're working with to support some of the social enterprises which they know about. And they're like, you know, these people are actually creating impact and they're willing to vouch for us. Yeah, there's just so many stories on that. And there's so many times in the last like 4 years where we thought we're just going to fail. Like the entire, we're just going to give up the company and that's it. But somehow or the other, I guess, whether through Jugaad or whether through luck or through, you know, the work we're doing, we managed to find a way through. Yeah, there's a whole bunch of luck, to be honest. I can't.
I think we should give ourselves more credit, you know. It's perseverance.
Yes, perseverance in tough situations.
Yeah.
Exactly. Yeah, I think one more we have. What is the biggest challenge in impact investment and measurement? Biggest challenge.
Yeah, I think there are a lot of challenges. I think probably the overarching one is that there are so many different ways to approach it. And because, you know, impact investing it's across all asset classes, it's across all fund sizes, it's across all geography. It's not, it's broad. And, you know, it's hard to come up with a measurement system that works for all of those different types of investors in all of those environments. And actually reports on things, spits out information that is useful and additive. So I personally see the sort of biggest issue is we're really trying to coalesce, and I think as an industry, around like a singular framework or a singular system. And I think that's going to be really hard to do. I'm sort of the mind that on an individual level, we sort of need to have funds and companies just start trying and working on implementing some sort of impact measurement practice that works for them, and start trying to adopt different tools and just see what works. So I'm sort of of the mind, like, let's just get started on something, and everyone should be trying it in some capacity. But yeah, I'd say the biggest issue is just sort of the breadth of this field and the variety of different tools that are out there. It can be very hard to navigate if you're entering this field or just trying to develop your practice, and leads to quite a bit of confusion that I think could be avoided. But yeah.
Yeah. Are there any trainings available for learning this kind of measurements and monitoring? Like
We actually at when I was at the GIN,
yeah.
Oh, so I'll just say quickly, when I was at the GIN, I led a training on impact measurement around at the fund level. So for emerging market fund managers. I don't know if that training is still happening, but it might still be. The GIN did facilitate those and also share just other trainings that were happening in the market. I'm only familiar with ones that are happening at the fund level. And for our members, we do kind of like one-on-one and just larger sort of like informational sessions and road mapping on the different tools in the market and what have you. So, but I'm not sure of any sort of overarching training that's sort of the industry standard. Others might be though.
Okay.
Thank
you.
To build on that. Oh, did anyone else want to jump in?
May I make a comment on impact, by the way?
Yeah. Yes, please.
It's a comment and a question, probably to the panel. So impact is a great buzzword that everyone's using, but to monitor it and to gauge it and to get a result and to analyze it can mean many things unless you put some sort of, so maybe my impact would be different to anybody else on the panel's impact. Or is there, and it's a question, is there just a standard, this is the impact? So a good example, for me, two most important impacts in all my projects I've done over the years, and some of them doesn't have to be a financial impact. An impact could be to go and set up that educational program. The impact is for me, and let's just be specific on PayCode, and that is to change the lives of 100 million people. That's the impact for me or for the company. And we sing it, we mission it, we put in our mission statement and so. Now, changing the lives can be different to say changing lives to somebody in New York. I could go to a beggar in the city and change that person's life. That's an impact, but it might not be the impact on what I set my goals of at the beginning. So matching my impact to, so there's two things for me. It's changing the lives of 100 million people in the deep rural areas of Africa, period. Nothing more, nothing less. Now, if that may filter into the semi-urban and urban, I'm not going to say no. If suddenly there is 100 people that are beggars in the city of Lusaka or Johannesburg or wherever, and I manage to impact their lives positively, I'm not going to say no. But the main focus is that deep rural. That's the first and foremost. The second is I've also got an impact to and responsibility to my shareholders and investors, because they've put money in. Now, unless they are people who want to just put the money in and not looking for a return, like the Soros Economic Development Fund, and it didn't match the other investors, if you know what I'm saying. So the impact that I was having to Soros Economic Development Fund was great, but it wasn't matching the other investors. There was a mismatch. I should have had everybody a Delaware company, and then I would have matched all the impact and I wouldn't have any issues. But I had some investors were private equity firms that have returns they have to give back to their board. And then I had one major investor who really just didn't want to see profit, but just wanted to see an impact to the thing. So coming back to the point, is there a formula, or was it just PayCode has an impact for 100 million people in the deep rural areas, achieve that goal, tick that box, and go back to its investors and give the investors a good return on their money at the same time? Second impact, I've now achieved it. And so impact to me, I'm sorry to say, unless there is some sort of written formula, written standard, it's personal, it's generic, it's related to the project that you're investing in. You know, if any one of the panel wants to invest in my company, is that going to meet the impact? Because I don't know what they want. If they want to change the lives of the 100 million people, at the same time they want a return on their money, then maybe yes, I'm going to deliver that impact.
Thank you. Edward, you wanted to say something?
Yeah, actually, it's a great response to Ralph and ties in with Annie's earlier comment. I would push back a little on, how impact is very personal and how it's hard, and how it's like, you can use any type of method. If you look at impact, especially from the evaluation space, social intervention evaluation, been around for decades. And they have really high standards to some extent. I mean, you have the gold standard RCT. You also have quasi-experimental and observational designs. And you really go down the ladder in terms of the hierarchy of evidence. And looking at this hierarchy of evidence, the evaluation space, admittedly with all its flaws and all its problems, have been able to quantify impact, and not necessarily in a fixed, here's my financial statement and here's the metrics which we have to hit kind of quantification. Instead, you have articles being produced and evaluations being done on social interventions, which are rather robust and have some standards of validity, which when published, and because of the transparency within academia, is of certain standards. And I'm coming from a researcher and putting on my research hat and trying to bridge these two worlds. That being said, obviously, a lot of these evaluation designs and in the evaluation field is not applicable over to impact investing because of the fast turnaround times, the high costs, the inefficiencies, and the inflexibility of a lot of these models. I do think that it's possible in order to create certain standards and certain measures of verifiability. In fact, I'm writing a study right now on that. But it's not to say it's easy at all. It's extremely difficult, and I think that the industry still has a long way to go before you can consolidate around certain standards of impact. You're saying, I'm creating X and X impact. It's, as you said, Ralph, it's not like, you can it's not like a single intervention can have multiple different impacts and multiple causal relationships, overlapping causal relationships, which are extremely difficult to do. But looking at the results of the evaluation space, it is possible, and they've done it pretty effectively. Being able to adapt it to the needs of impact investors and social enterprises and the priorities in the space is something which we just have to do. And it's going to take time to do.
Wow, very interesting. Very, very insightful. I'll get in touch with you for learning more about your paper, Edward. Thank you. We don't have any questions, and we are running over time also. So I'd like to wrap it up here. Thank you so much to all our panelist speakers for sharing their insights. It was really useful and enlightening. Now, what should be the next steps for all of us, especially myself and the attendees and my student community as well? So where do we start contributing and start making our impact? We can start learning. The first thing that, the last webinar that we did was doing well by doing good, and it was on ESG. So the first thing is to learn about sustainable development goals, where actually you can measure some, things, and there are prescribed like codes and standards, which ones we care about the most, identify those. And then we can focus on conscious consumption. That's very easy as far being consumers. Be consciously, consume things consciously, and that will be the direct contribution. Then collaborate with key stakeholders in our society. For example, when people ask that where to create the impact, it's around us. To look around yourself, that who is in need, and then look at that, creating that impact. And above all, the investments. If you are an investor, so make sure that your investments are aligned with these new values and focused on impact funds. So that's where we are. Thank you so much for today's attendance and participations. We look forward to interacting with you more in future and having you with us again. Thank you so much.
Thank you.
Annie, have a good day ahead, and to Rolf also, good evening ahead, and good night to the other speakers. And
thank you so much.
Yeah.
Thank you.
Thank you.
Thank you.
Bye.
Bye.